Hey, what's up, guys? It's Ezekiel Chiu here. Today, we're going to explore the commonly known double top pattern. So, if you were to only watch one video on how to trade the double top pattern, this is it, right? Watch to the end where I will show you my preferred way of trading it. First off, what is a double top chart pattern? The double top pattern occurs when the market reaches a resistance level. That's where it retraces slightly, which is now followed by a second attempt, right? Like a second try to continue the trend. So then, when the second attempt fails to continue in the same direction, that's where the market tends to reverse. So let me give you an example. As seen as this example, the market is in a what trend? An upward trend, right? Which indicates that the buyers are in control. So when the buyers reaches the resistance level, the market retraces. And then the buyers will try to make another attempt to try to break this level of resistance. But what happens? So what happens is that they fail for the second time. So when it fails for the second time, it indicates what? It indicates that the buyers are no longer in control of the market. And what is going to happen is a reversal is likely to happen. A double top pattern indicates the failure of buyers' ability to push the market upwards. The double top pattern is what we call a terminal pattern. This marks the end of the what? The preceding, meaning the previous uptrend. So when you see it forming on your chart, right? It can be any chart, any vehicle out there. It signals that what? The uptrend is done. And then what? It potentially is going to lead to a what? A downtrend. And even maybe a prolonged downtrend. So identifying a double top pattern, it's important because this signals a big shift in the overall market dynamics. Even though it's as simple as it is, double top pattern happens all the time. And this is like one of the most crucial chart patterns to master, to put it into our trading library. There are some types that occur with the double top pattern, right? So let me just going to show you some of them. First off, number one, the double top matching highs. So this double top, right, features what? Matching highs, indicating identical high points in the pattern. This is the easy one. So number two, a double top with a higher high. So a double top with a higher high occurs when the pattern includes what? A higher high. So even though when it includes a higher high, right, some people will say, it's not a double top because it's making a higher high. No. It is still considered a double top. Next, number three, a double top with a lower high. So now, a double top with a lower high can be referred to as a leaning double top. So this is what? Characterized by a resistance level that appears to be leaning when drawing a line downward. The three variations of the double top occurs all the time in the market, right? And this allows you to spot pretty good trading setups if you are interested in trading reversals, if trading reversals is part of your entire trading system. Because like some people only trade like trend continuation, right? But hey, trading reversals can be really, really profitable. So now, how do we trade the double top pattern? Let's start by addressing a common mistake, right, that most traders make when they are trading the double top. So for example, let's say in the midst of a strong uptrend, the market shows sign of a potential double top. After being tested once and twice, right, traders often assess this chart like, okay, they make like certain observations, right? Oh, look, this is a double top, right? So I better go and short it because the market is going to reverse towards the downside, isn't it? So just because they see like the two pointed peaks, the two highs. They think the market is going to reverse. Now, think about this logically. The trend duration. So what is the trend duration? Chances are that it could have been in motion for, say, months or even years. Number one, you got to think to yourself, what makes you think that just because you see two pointed peaks, right, two highs that forms, say, after 2, 3, 4 weeks, for example, and the market is going to reverse to the downside, right? I mean, something that has been in motion for, say, months or even years going up, right? Would it reverse just because it's a small move? So that's where you got to understand the preceding market trend. Is this setup strong enough? This is what I always ask myself. Is this setup strong enough to take down the previous uptrend? So now, let's talk about the first major mistake traders often make when trading the double tops. Don't just jump into trading double tops blindly. Pay attention on how long it takes for the pattern to form. If it forms too quickly, there is a good chance that the existing trend will continue. So next, let's talk about how to short the highs of a double top using a simple trading strategy. Imagine the market is in an uptrend, then it retraces back towards the highs. Instead of just blindly placing a sell limit order and hoping for a double top, it's better to let the market review its intentions first before you take a trade. So if you were to blindly short the market without a plan, setting a stop loss would be pretty challenging. So instead, wait for the market to form higher, get rejected, and then close lower. A form of price rejection. So although you're trading against the trend, this approach provides like a point of reference to where should you set your stop loss. And there's potential for capturing a move as the market may retest the previous swing low. Let's look at an example, the Aussie dollar. Here is the double top. And you see price rejection sticking out at the highs, right? So this rejection serves as a point of reference. You can consider to short the market. Placing your stop loss right at this high or with a buffer. The objective is to see if the market can retest the previous swing low. Since you're trading against the trend, be more aggressive with your trade management. If there are signs of reversal going to appear, indicating that the trend might continue, that's when you will want to exit your double top trade promptly. This approach is more of like a hit and run, aiming to see if the market quickly moves lower. If not, exit the trade, right? This is kind of how you can short at the highs of the double top by waiting for the market to review its intentions through a reversal price action candlestick pattern. For example, like a shooting star or engulfing patterns. Next, when is the best time to short the breakdown of the double top, right? So let's talk about how most traders would do it. I mean, the common approach is to what? First spot a double top, wait for the breakdown of the neckline, and then go short. Right, this is the common approach. This method, right, involves setting a wide stop loss, typically above the high of the double top. I mean, the issue that we have with this is that a strong momentum move could quickly reverse, resulting in a trade at the lows. So, what is the solution to this problem? The answer is to wait for the build up to form at the support level. One of the issues that we have with the entering at the break of the neckline and your stop loss above the highs is also that your risk to reward ratio is not going to be good because your entry to your stop loss is too high, not giving you a good risk to reward ratio. So that is like not an ideal system, right? A strategy to be placed into a trading system. All right. So how I would prefer to trade is to wait for the build up. So what is a build up? A build up occurs when the market forms the double top, then descends to the support level and consolidate near the support lows, which is the neckline level, right? So it resembles like a koi characterized by tight contraction with reduce volatility. The volatility is not very high during that period in time, right? It's kind of like ranging very small. And this is evident in what? Smaller than usual candle ranges. So this build up serves as a point of reference to set your stop loss, providing a tighter stop loss compared to placing it above the double top highs. If the market breaks down from this build up, the stop loss can be set what? Just above the minor swing high, which obviously gonna give you a way better risk to reward ratio. Now, the contraction of volatility, meaning the volatility gets smaller during the build up phase, often leads to a big expansion. This is where the market is building in a small range, building. The momentum gathers before boom. And that's when the market goes a big drop. So when you see a double top, if in combination with a build up, that is like one of the best ways to trade the double top, because number one, it gives you a smaller entry to stop loss area. Number two is when it boom, there's a good chance that it's going to move big and then giving you a big RR and increasing the probability of the double top working out. So this is like one of the best ways to trade the double top pattern. Let me show you a quick example. So in this chart, that's where you see the double top, right? So if you miss the opportunity to short at the highs, which is the aggressive method, right? That's fine. As the market reaches the support area, that's where it forms what? The tight build up. So that's where what? You enter with the build up method, giving you a way better RR, apart from you entering at the highs. Now, let's sum it up. A double top pattern indicates a failed attempt to break the resistance, which ends an uptrend, suggesting a potential long-term downtrend. Next, the double top pattern has how many types? 3 types. They got matching highs, they got higher highs, and they got the lower highs. Number 3, avoid blindly trading double tops, especially if they form quickly and the previous trends has been in motion for a pretty long extended period of time. Number 4, to short at the highs of the double top, you don't just short blindly. What you got to do? You use reversal candlestick patterns, such as the shooting star or engulfing patterns. Number 5, that's where, and my preferred method is if you did not enter at the top, that's where you can enter with the what method? With the build up method. I've created a free 5-part training that shows you exactly how I trade. Check out the link in the description below.